We apologize for this brief interruption in the show. As many of you likely know, the Higher Standard podcast is officially sponsored by Transcend Company. Transcend has been my longtime provider for both testosterone and peptide therapies, but they offer so much more. Whether you're interested in health, wellness, or longevity, it all begins with you getting your blood work done. A lab draw will help you get the numbers and establish your baseline. You can go to transcendcompany.com/THSP. That's transcendcompany.com/THSP. Or you can click the link in the show notes on any streaming platform and on YouTube. Fill out your information and one of the representatives will contact you to get your journey started today. Now back to the show. I'm still thinking about the
You can't. It's not meant for this kind of show.
It's not wholesome at all.
It's not.
We are so wholesome. I mean, a couple phallic references every once in a while, but wholesome otherwise.
We're trying to clean up the show, man.
I mean, our last show had jokes about Sesame Street. I mean, that's as wholesome as you get.
Right. Exactly.
Welcome back to the #1 financial literacy podcast in the world. We missed you guys. Sitting next to me, as always, my partner in time, the one and only Saied Omar.
Oh, thank you, man. Sitting next to me on my left is my partner in crime, Chris Nahibi. Welcome back to the show, everybody.
And as is necessary, we must remind you that behind the ones and twos is the man, the myth, the legend, DJ Haroon.
Hi, everyone.
A.K.A. Grover.
Bing, 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 bing.
No PTO this last week.
No PTO this last week. Well, technically you were traveling. And because we don't do two shows, it would have been PTO if it were not for the fact that we're doing less shows.
He's not jet setting anymore, though. He's driving.
Yeah, I think he just wants to feel like us normal people for a while.
Us? I'm sorry, Chris.
Mr. First Class, Mr.
That's not true.
When was the last time you took a road trip, Chris?
Like in the vehicle driving?
That's what we're talking about.
And me driving myself?
You driving yourself with the family.
Yeah.
I don't take you as a road trip kind of guy.
No, it's because I'm not.
Or he doesn't do road trips. He doesn't do camping. He doesn't.
For Chris to do a road trip, he needs to get one of those like luxurious Sprinter vans.
I thought about that. Okay, let's just have an open conversation quickly, okay?
Let's do it.
Hefe's not going to like this.
Hefe.
Your wife just started listening to the show. You ain't talking to me, bro. You guys are actually kind of funny.
We are funny. Thank you for noticing.
Yeah, we are slightly kind of, maybe, I don't know. So yeah, I like working in consistency. I like having consistent sleep. I like having consistent structure. I know.
Well done.
Just consistency.
Yeah, it's every show. I gotta have that.
Gotta have the consistency.
Can pop mid-sentence. I like those things. Traveling is cool. I like traveling. I think a lot of it is romanticized. How many vacations or trips have you been on where you've got back and said, oh man, I'm tired. I need a vacation again?
Oh yeah, almost every single one.
Right. Haroon, today, when he was talking about his 7-hour drive up and his 7-hour drive back from the place he calls Sack.
Okay, hold on. This is a little bit different, man.
That's 14 hours. He literally said, oh my God, it was such a long drive. I was so tired.
Bro, he went up there.
I didn't have fun up there.
Bro, he went up there. He was up there for 24 hours.
No,
24 hours, and then he came back. That's not a vacation, bro.
I'm just saying.
Those are obligations.
Okay, so.
I was forced.
Bro.
I wanted to go up there.
He's tap dancing.
I'm trying to change the narrative to help you help yourself.
Right. He doesn't get it.
I get it. My wife listens. I don't think her sister does.
Okay, let's talk about finance.
Let's do this.
Because that man back there ain't going to be here next week when he's dead. Right before coming in, something happened. It's big. We're going to break it down in 3 separate articles that we happen to have already had, 2 of which anyway, because we knew this New York Community Bank debacle was going to grow and be problematic. And in fact, it very much has. It is in my mind, a big fucking problem. We'll get into why, explain the history, and help you understand what you will undoubtedly be hearing in the news between today, as we record this, the 6th of February, and by the time you listen to the show.
And more importantly, Chris will take you behind the curtain a little bit to see all the things and hear about all the things that you don't know what's going on.
Wow. What Saied is colorfully trying to elaborate on is I'm going to be talking a lot of shit. And I'm going to give it to you real and raw. The way you like it.
Bradley Martin raw?
No, that's clickbait raw.
Oh, okay.
Yeah,
that's
I'm
right.
going to give it to you actually raw.
Yeah.
Like,
I'm not trying to hate, though. I enjoy myself a little Bradley Martin from time to time.
I do too. It's just a little too much.
Yeah, I know.
what I mean?
From time to time.
Sometimes it's too much. And I'm not that demographic of age.
Anymore,
So
right?
sometimes you're like, anymore.
Anymore. I'm saying you once were.
No, I always had
He hasn't been
maturity.
on the scene for that long.
I don't know. But anyway, yeah, his stuff is just it's lost on me. Okay. Haroon, what do you want to say?
I said nothing.
You want to say something? I can feel
Nope. I am being polite. I'm not an asshole like you.
Oh,
it. You can't not insult me by insulting me, just for the record. Okay. Wow. Then we'll go on to Jerome Powell and his clusterfuck. Was it 60 Minutes interview that he did?
everybody had a hearty, and Jerome Powell decided to throw some cold water on the whole party.
Yeah, Mr. Steal Your Girl came to the party and took everyone's girl and went home.
That's what he did.
And now it's a party of dudes.
Mr. Steal Your Girl. That's a great name.
Nobody wins.
Yeah.
Okay? Well, I mean, some dudes, but not most dudes.
Yeah.
Maybe. I don't know. It's weird.
The
weird
elite.
time. Yeah, the elite. We're talking about credit card delinquencies. And if there's time, we got some extra stuffs in the form of TikTok influencers. And apparently they're going to make you rich. And how much you can deposit at a bank, which, believe it or not, is a lot more complicated than you might think.
Right.
Let's jump right in to regional banks and specifically regional bank, New York Community Bank. They started off the week, this according to the Wall Street Journal, cutting their dividend and posting a loss.
Okay, so real quick, what is a dividend for our listeners out there that don't know what a dividend is?
So a stock that is publicly traded,
Mhm.
right, that you can buy, can return a portion of their profits to you, the stockholder, in the form of a dividend. This is usually paid out quarterly.
Right.
Okay, so on the quarter, they announce their earnings, and they usually announce their dividend. So let's just hypothetically Q1, January, February, March, April, there's an earnings call. They typically announce the earnings call with their investor deck and everything else.
Mm-hmm.
And they also announce the dividend in and around that time.
Right.
That dividend is anybody who held the stock prior to that day or by the end of the quarter, generally speaking.
Right.
You get paid out this return of profit. So the company was profitable, they return it back to you. Now, if the company is not profitable, in this case, they post a loss. They're making negative earnings per share, right? They can't pay a dividend on losses, or at least it's a really bad idea
Mm-hmm.
because it's coming out of their capital to do so. So yeah, cutting your dividend is a sign to the market that, look, we've taken losses that are significant. We are not cash flow positive for the quarter, and we can't reasonably return this profit back to you, the shareholder, because we need it to operate our business, and there's no profit anyway.
Right. And sometimes you'll get investors that invest in your company solely for the reason that, oh, you've been paying out a dividend. You haven't missed on paying out this dividend for X amount of years, right? So cutting your dividend is a big shock to those investors that are like, wait a minute, the only reason why I invested in you guys was because of this dividend that you guys have been paying out for X amount of years. Look at Facebook. They just announced that they're releasing a dividend. What happened to their shares?
Yeah, it spiked all the way up.
Yeah.
Yeah,
Right.
They went to the moon. So here's what I'll tell you about dividends. Investors, particularly large institutional investors, some of them, particularly in the banking sector, they will only stay invested in your stock if you pay a dividend. That's part of like their underlying prerequisite into investing in you. Hey, we love your stock. We love to invest in you. We're only going to invest in you if you're paying a dividend.
Right.
That matters to them. They have a whole committee on this stuff. It's not like it's just a simple decision for them. It's black and white.
Okay.
So they're going to have some investors that might have to sell out of their stock and say, hey, we can't hold your stock anymore. We might sell off, dropping the value even more.
Even more. Is it because that people want to diversify their portfolio by having some of the stocks that they own be ones that provide a dividend?
Well, diversification is one part. A lot of it is like if you're investing in like these community banks, and even though this is a $100 billion bank now, you're still relatively small compared to the globally systematic and important banks, the
Right.
GSIBs. So you want to invest in something that gives you some type of return on a quarterly basis, because if you're investing in it, you want some returns, and then you want the possible upside later on. A great example, everybody who invests in real estate, like you want the monthly cash flow, but you also want the equity appreciation over time.
Right.
That's really what you're banking on here. Banking on when you invest in a stock like this, and you need a company that pays you dividends. You just want two different sources of income, if you will.
Makes sense.
And there are a lot of people who live solely off the income they make from dividends,
Mm-hmm.
right? They have a very diversified portfolio, lots of money under management.
You'll see
They
a
have
lot
bonds.
of those clickbait YouTube videos that are like, live off of dividends, and you can invest. But if you really do the math, a lot of money has to get invested into really I guess, provide a living for you, right?
Lots. Haroon, if you can pull the Wall Street Journal article to the right a little bit, I want to read a little bit from the first couple of sentences or the first couple of paragraphs here. Up a little higher. Perfect. All right. So the KBW Regional Banking Index fell 6% on Wednesday as a result of this. Now, the KBW is basically all the regional community banks in this small index. So the S&P 500 is the 500 best performers in the stock market. In the S&P, Standard & Poor's, like, I guess, collaborative thing.
Right, and the 500 companies go in and out, but it's always going to be the top 500.
Top 500 performers. And generally speaking, when you invest in like low-cost index funds like the S&P 500, you're betting on the performance of those top 500 companies, right? Well, the KBW is a similar index, but it just has regional community banks in it.
Mm-hmm.
The entire index dropped 6%.
Wow.
A big drop. And I knew right then and there, hold up, we have a fucking problem. And I'm going to explain why this should and could have been avoided. But wait, there's more. New York Community Bank stock, meanwhile, closed down some 38% after announcing this. Its worst day ever in data going back to 1993. Through yesterday's close, it had risen about 4% over the past 12 months. It went up 4% in a year, okay?
Right.
And it went down 38% in a single day.
Right, and a big part of that had to do with they posted a surprise loss of $260 million in the fourth quarter. Mm-hmm. They cut their dividend down from, I believe, 17 cents per share to 5 cents per share, correct? Mm-hmm. And remember, this is a bank that really positioned themselves as being very strong. They purchased Signature Bank not too long ago during that contagion period.
So they purchased Signature Bank's assets.
Yes.
There was a bank they acquired before that, Flagstar Bank.
Yes.
Single family. So they had gone pretty hard at mergers and acquisitions. As a matter of fact, the last acquisition that they made, right? It is raining really hard outside. I can hear it.
Oh yeah, yeah.
It's crazy. Wow.
I wonder if
very romantic. Should we hold hands? Haroon, put on a fire in the background. Fuck the podcast. So what's really interesting that they did, the last thing they did in the last acquisition is they actually pivoted regulators to the OCC, the Office of the Comptroller of the Currency.
Right.
That was interesting. And you could argue that they probably did it because their previous regulator would not allow them to grow this fast.
Okay.
But they grew from a smaller bank into a $100 billion bank very, very fast. And part of that was a Signature Bank acquisition.
Got it. Okay, so regulators can actually do that, keep you from growing at a really fast pace like that?
Oh, yeah. They can absolutely say, no, this acquisition is too fast. You guys aren't ready for it.
Mm-hmm.
So for the fourth quarter, the company also recorded a $552 million provision for loan losses, up from $62 million in the third quarter. Let me translate.
Mm-hmm.
A $552 million provision for loan losses means they have to set aside $552 million for potential losses on loans that may go bad.
Right.
So, Chris, what were these loans?
Yeah.
What might go bad?
How do you even decide on that dollar amount? Like, okay, well, we really need to up this, and we're gonna need to up it by this amount.
Okay, and this is where this story gets kind of fucking weird.
Oh,
okay?
Really? Okay.
Yeah. So, I happen to have had some pretty interesting conversations with some people who have a lot of insider information, and then it ultimately became public.
Okay.
And I'll tell you, when I first started hearing about this, I was like, that can't be right. This has got to be hyperbole. It's not real. So, New York Community Bank had two office buildings in particular that they knew were under stress. Lots of vacancy, not performing very well. And as a result of this, they have to look at this and say, okay, what's our value? They're required by regulation to do that. They got appraisals. Mm-hmm. And the appraisals said, hey, you know what? The values are still supported. These properties are okay.
Wow.
Now, we don't exactly know what happened next, but we do know the Office of the Comptroller of the Currency, the OCC, required them to get something known as a BPO, a broker's price opinion.
Okay.
Now, traditionally speaking, an appraisal by an MAI appraiser, which for the purpose of this conversation is a very experienced appraiser capable of appraising commercial real estate.
And who's licensed to do this.
Licensed to do this, right? You've got to have a lot of experience in the appraisal world, and it's like an apprenticeship. It's not easy to do. Mm-hmm. Okay? They came down with values that supported that these properties don't have big economic losses. OCC said no. And the logic that I'm told internally was that, you know what? The appraisers aren't up to date with the current market. These broker price opinions, which is exactly what it is. Hey, Saied, you're a real estate broker in the commercial space, right?
Yeah.
What do you think this property's worth?
How much do you think you could find? Could you find an investor to buy this?
Do you think you could sell this for this price?
Yeah.
and then you give me a written statement with your comps and what you think it might trade in the market, basically doing what an appraiser would do without a license.
Yes.
But you're seeing the front line sales, which the appraiser also takes into consideration to do the appraisal. Well, apparently the BPOs came back with a massive discount to what the appraisal was.
So, I mean, what level of integrity are these brokers actually having, right?
Well, lots of questions. I have never in my career thought a BPO was a valuable source of valuing a property.
Right. It's like writing a paper in college. I remember back in the day, this was the case. You couldn't cite Wikipedia as a cited source because it wasn't considered valuable.
Which is ironic because Wikipedia is so fucking arrogant about what they think are valid sources.
Right. Exactly.
You know what I mean? It's like
what the
it's
fuck?
very confusing.
It's ass backwards, right?
You can't be an ugly short guy and demand a Brazilian model wife, okay?
Where'd that go
Like, you just can't demand that.
Yeah.
Now, if you get it, you're lucky. It's good for you, but you keep, listen.
Right.
You're beautiful, baby, but I only date Brazilian supermodels, okay?
You're right.
I know that I'm not attractive. I know that I'm not wealthy.
Yeah, but that's my threshold. That's
what I need in order to feel secure.
Right. So it's like that. So you wouldn't use a broker's opinion as a valued source.
Traditionally, no. Now, obviously, you can. There are certain circumstances, and I don't know the backstory here, but they went with the BPO, and it caused this massive write-down. When I first heard about this, I thought, okay, management fucked up. They weren't setting aside reserves every quarter. They weren't communicating to the market effectively. They were hoping the Fed would cut rates. And right around this time, the Fed was like, you know what? We may cut rates.
Yeah, there was a lot of predictions that people were hoping, okay, maybe the Fed will do this in January. But the real date everyone has been circling has been March.
Yeah.
Well, somebody came and took a big shit on all of that.
We'll get to that later on. Your boy Jerome Powell pretty much said, you know what? I got the spotlight.
Yeah.
I'm going to use it like Drake did to film himself.
Yeah. Remember when I said the whole thing, higher for longer?
I just realized you don't know what Drake did when I said that, do you?
Wait, what? I was thinking about the next setup. What'd you say?
Oh, my God. You don't know?
No, I didn't hear it. Repeat what you said.
Like Drake filming himself.
No, I don't know this.
You don't know?
No, don't tell me. Is this bad?
Oh, no, it's good, actually, but it's bad before you get to the good.
Wait, but he's also really strategic. He knows how to get his name out. Maybe this is done intentionally.
Oh, Saied, you're digging yourself a ditch.
Come on. I got to back up my guy. Come on.
Look, first of all, Haroon, are you where?
No.
Nope.
Hell no.
Okay, all right.
Let me help you.
Yeah.
Fuck, I wish I was.
All right. Footage was leaked this morning of Drake filming himself in a mirror masturbating. He's laying down in a bed, filming himself in the mirror while he's touching himself behind the camera, and it is Drake masturbating. Now, the first person I saw talking about this happened to be the 1 Minute Man, ironically, from Barstool Sports. And his response is, hey, bad news, Drake, this leaked. I'm sorry. Good news is Drake's got every fucking thing in the world.
Yeah.
He's got a lot of money.
Yeah.
He's well known. He's a great rapper.
Yes.
And he's got a big old ding-a-ling.
Right. What is he going to say? That he doesn't masturbate?
He's like, look, like, I want Drake to have a small penis. I really do.
You know what's going to happen.
It's not fair.
You know he leaked it because he wants people to hit him and be like, you don't need to do that for you. I'll take care of that for you. That's what's going on here. That's why he leaked it.
I don't think I think he probably sent it to a girl who would like.
Yes.
Yeah.
Who just threw away her NDA probably.
Who probably was like, man, let's get some money selling this thing.
Do we know if it's like a recent video? Because he's got beef. There apparently he threw some shade. He threw some shade at Rihanna. I heard over the weekend. So maybe this is something he sent Rihanna back in the day.
Why do you know that?
That was the headline that I saw.
You think that actually happened, Rihanna and him?
Come on, man. Yeah.
What do you mean? Come on, yet? I know that you think you are Drake.
Come on, man.
So it's like you co-signing you, but just out of morbid curiosity, why do you say it like that?
What do you mean? Why do I say it like what?
Come on, man. Yeah.
How do you turn down Drake?
You're Rihanna.
But back then she wasn't Rihanna. Now she's a different level of Rihanna.
Yes, they did. Back in 2009 to 2010, after Rihanna broke up with Chris Brown, she went on several dates with the one and only Drake.
Well, that's why they got into that fight at the strip club.
And that was when they made the song What's My Name to declare that they were dating.
Well, there you go. I hate to say I told you so. Let's get back onto finances.
Hefe's mad again.
Hefe's?
Me? Or oh no, your wife.
What? What do you mean?
You got your wife, man.
No, bro.
I'm
You're
talking
you're
about Jeff,
he does,
man.
Come on, man. Jefe is Jeff.
Oh, Jeff.
I said that earlier, and I was like, I went over his head. Hopefully,
Yeah,
Well, I thought you were talking about like your wife, the boss. El jefe.
El Jefe means boss.
Jefe means boss.
I don't know. We're
So he's using Spanish, which I speak, to me. I thought we decided last show was Jeff.
It's Jeff.
We're going 21 Jump Street, right?
My name's Jeff. His name.
My name's Jeff.
His name's Jeff.
All right, next article, Haroon. This is your job, by the way.
Jeff's
switch articles.
getting a lot of love.
He's getting a lot of love, 75%. All right, so
Yeah.
from the Wall Street Journal, New York Community Bank's problems look mostly, I can't read it because Haroon's fucking me once again. Okay.
that wasn't the article. That's why.
Scroll down here a little bit.
Can you go back to the other article for a second?
Yeah.
Just for a
This
second.
is a continuation of the last article.
Yes, I know. That's why I wanted you to go to it. You know, honestly, do you listen to the show?
You told him go to the next
Yeah,
article.
this is the next article.
This is the first article.
Continuation of the first
No,
article.
the first article is a different one. This is New York Community Bank's problems look mostly to be its own. The other one was titled the stock drop. You don't listen to me either.
Don't do this.
Fucking A, man.
No one listens
Do
to
this. Okay, go ahead. Por favor.
Here's the problem. Is you know what? You two drive.
Don't-
You guys got to drive separately from now on. Okay, that's the rules. Okay.
He doesn't like pontificating on what we talk about. After the
I don't
show.
know what's going on here, but y'all making me look real stupid right now.
All right.
So from the New York, son of a bitch, I'm so fucking. From the Wall Street Journal, New York Community Bank's problems look mostly to be its own. Share price, as we referenced earlier, dropped off a cliff. There is a chart, which we will put right here if Haroon does his job later on, showing the KBW Regional Banking Index and New York Community Bank. And it shows you the drag down effect they actually had on the index because they themselves dropped down.
Right.
So if you could scroll up a little bit so I can get the rest of the text there at the bottom. A little more. Perfect. All right. So New York Community Bank was recently down more than 30%. We heard 38%. While the KBW NASDAQ Regional Banking Index dropped more than 3%. New York Community Bank is a large commercial real estate lender. Okay, so they downgraded two pieces of commercial real estate.
Mm-hmm.
They're a large commercial real estate lender. It absorbed some deposits and assets of failed Signature Bank last year. So the regulators allowed these people to buy a failed bank with even more commercial real estate assets.
Right. They felt that they were strong enough to be able to support this transaction.
And they hired former First Republic bankers.
Yeah.
Okay.
Oh,
So again, much of what happened at the bank in the fourth quarter was specific to New York Community Bank. The company reported $185 million in net charge-offs in the fourth quarter. Right, that's actual losses, kids. So not only do they set aside those reserves for potential losses, over $500 million,
right.
but they also wrote off $185 million in actual losses in the fourth quarter. Okay. So, and the two properties, co-op property and the office loan we talked about earlier. So there is a whole lot here that went wrong from an accounting perspective.
Mm-hmm.
And then today, the whammy.
The whammy.
The whammy. Right before we came in, literally a couple hours before this happens. And I know tomorrow is going to be, well, the technical term is a clusterfuck. Okay? So let's go back a little bit, shall we?
Let's do it.
In March of this year, Silicon Valley Bank was seized by the regulators. It caused a contagion period. It was based on largely behavioral economics and people trading on the stock because they said, hey, this bank has assets that are underwater. You should not hold your deposits there. And the entire market went wild. There was a whole banking deposit run. There was a Fed line that was set up. It was catastrophic. And it was almost entirely banks on the West Coast, obviously Signature Bank being an East Coast bank, a little different. That being said,
Right.
okay, we saw a very, very scary time.
Right.
People are very afraid that scary time is coming back. Haroon, if you can go to the next article there.
And I think something that I want to make sure that we pinpoint, when we talk about these banks going through these scary times, a lot of people like to write it off as like, oh, big greedy bank could potentially go under. What's the big deal, right? There's a lot of jobs at stake. There's a lot of businesses that have business loans with these banks, right? We're walking into a time where credit guidelines are tightening up. Where are they going to go to if they've spent the last however many years building a relationship with these banks? And you can't just jump over to a new bank and be like, hey, guys, my last bank just went under. Can you guys help me out? Like, it doesn't work like that. So it affects more than just the bank. It affects the communities that they service.
Oh, yeah. And as a result, according to Reuters, New York Community Bancorp is now being sued by shareholders as stock sinks to 1997 level. So they've had all these bad things happen.
Yeah.
They're already having a bad week.
A bad week.
And then the next article, Haroon, if you don't mind, Moody's, well, they came in and they just dropped the pee-pee right on someone's head.
I mean, look, it had to have been done, right? Why are they doing this?
I don't know.
Why are they doing this?
Because I don't fucking know. Look, so if you recall back in March, there were some very high-profile people from the venture capital, private equity sector, which said, hey, get your money out of there. Y Combinator, all those people who were out there saying, get your money out of it. And it caused a contagion run.
Yes.
But those are individuals, those are community. It was tight-knit into this fintech community, which is really kind of like, where Silicon Valley Bank was based. They were in that space. That was their market.
Okay.
We've all been worried about really commercial real estate since that time, and it's not really been a contagion period anymore, and stocks seem to have recovered for a while.
But we talked about it. We said that could be the catalyst this time.
It could be the catalyst. But then the Fed line came, and everything was okay, and then everybody said the banking system was strong and resilient until the last Fed meeting, where that statement was removed with no explanation.
Right.
Well, today, Moody's, according to the Wall Street Journal, cuts New York Community Bank's rating to a junk rating, extending sharp declines in shares. Downgrade. The downgrade is the latest blow to the bank seeking to shore itself up after acquisitions, property losses. Haroon, while we're going off on what I'm going to go off on next, do me a favor and Google largest banks to fail ever. And I just want to give you some context when we're done with this here. Right. So this happens after the close of business today. The market closes at 1 o'clock on the Pacific Coast time, right? Mm-hmm. A couple hours later, I'm getting ready to go to the gym. I'm changing into gym attire, thinking to myself, is today going to be buys and tries? Is it going to be shoulder with shoulders, by the way?
So,
this is where
I can tell.
Thank you very much. Yeah, they look like rocks, right?
Wait, so just shoulders. How many times you hit in muscle groups per week?
I've got a weird split right now. I'm doing chest and tries, back and buys, doing shoulders, and then I'm doing legs all in one day. I probably should split up legs, and then I'll have a day where I'm just doing like hard, like cardio style lifting.
Full
where I'm
body.
doing complex, everything.
Oh,
yeah.
So every muscle group technically gets hit twice.
I hit them all, baby. I'm a multiple hitter. You know what I mean?
Repeat offender.
Bang, bang, baby. Not one bang, two bangs.
Bang, bang.
Bang, bang.
Got it. Uchiwali.
All right, Washington Mutual, the largest bank to ever fail in history, failed at $307 billion.
I remember that. I had money there when it went under.
First Republic Bank may ring a bell.
Mm-hmm.
Not 2008 like Washington Mutual. This was May 1st, 2023, $212 billion. Silicon Valley Bank, $209 billion, March 10th, 2023, which kicked off the contagion period. And a little bank by the name of Signature Bank, which New York Community Bank bought the assets of, failed on March 12th of 2023 at $110 billion in size. Yeah. The next largest bank, which failed on July 11th, 2008, was IndyMac Bank, $31 billion. That
was the one that really set off the Great Recession, right?
Right. And then obviously below them are some other ones. But for the purpose of this conversation, right, this would be the fifth largest bank failure in American history if New York Community Bank were to be driven out of business as a result of this.
Yeah, big deal.
The fifth.
So for a company like Moody's, okay, Moody's is a trusted source that basically rates the type of debt that they have, right? Yep. So to rate it junk is literally saying it's like them getting an F on a report card.
Well, it wasn't just an F on a report card. So they took. So Moody's not only is a data aggregator, but they also do ratings. They're a rating agency. There's a lot of different rating agencies. Moody's is a very well-respected one, right? They cited financial risks and risk management and governance challenges. So for some history and historical context, I believe their chief risk officer, chief audit officer had left the bank in the last several months, right? And they're like, oh, shit. But this obviously doesn't help, right? So for New York Community Bank, which reported this surprise quarterly loss and slashed their dividend, what happens? The ratings firm downgraded the bank from a BA2 to a BAA3. Now, that's nonsense to most people. They're like, what the fuck is a BA2 and BA3? But here's what it means, okay? It means they downgraded them 2 notches.
Okay.
It went from 8 to a 6. Well, unfortunately, 6 is fucking junk.
Yeah.
Okay, these are not real numbers. I'm just using them as a way to. So junk, as you might imagine, is not good.
No.
It's bad.
It's really bad.
It's bad. Saied,
Yeah.
the only time that junk is good
Is when it's in the trunk.
there it is. Yeah. So you already heard the New York Community Bank was down 38%. What happens? Well,
It's actually down 60% from last week.
because they went 15% extra down in after hours trading.
God damn.
Stock hit its lowest since 1997, tumbling 22% on the day,
I know I'm laughing, but this is scary. Scary hours ahead.
having lost half its value since the loss was reported. Half. They got divorced.
Right. So this class action lawsuit that's being brought up by the shareholders, right?
Yeah.
What they're trying to cite is that shareholders said the regional bank defrauded them by failing to disclose it would set aside more money for credit losses. Okay? So this is something that we talked about on the show not too long ago, that banks are going to have to do more and more of this.
Oh, absolutely.
Right? Their loss provisions.
Well, so that's the trick people don't understand.
Yeah.
You can't just unilaterally set aside extra losses. So we went from something called ALLL, right? Allowable loan loss and lease reserve. Big complicated word, but basically there was an accounting methodology in place that banks had to follow in order to calculate their reserves.
Okay.
The problem with ALLL was really reactive. Loans went bad, you set aside reserves. They put something new into effect
Okay.
a couple of years ago, call it 3 years ago now, called CECL, CECL. Current Expected Credit Loss was supposed to be the acronym,
Okay.
right? They all sound fancy, but basically it was supposed to be a proactive, right? At loan origination or acquisition, life of loan losses, you just set them aside.
Which makes way more sense, right? You want to be proactive when it comes to these things, not reactive.
In theory.
Yeah.
Except here's the problem, kids.
Okay.
If you're taking a model that shows the historical performance of things like, I don't know, commercial real estate, office space, and you say, hey, look, this is the past performance in the sector.
Mhm.
Let's just say, typically speaking, and we'll throw out a number, 5% of office space goes bad. So you make a $100 million loan in office space, you set aside 5% for potential losses. No matter what happens, even if it doesn't go bad, effectively that's what this model would say you do.
Okay.
Whereas the old model would say, until it shows signs of weakness, you don't set any reserves because it's a performing loan.
Yeah, but we're stepping into challenging times where you don't know if 5% is enough.
Okay, but here's the problem. Unprecedented moves by the Fed
Yes.
to increase rates at an unprecedented cadence.
Mhm.
You've got them doing things that they knew was going to hurt the profitability of these banks.
Mhm.
You have bank failures. You have the opportunity to stop, and likely were stopped by your regulator in acquisition, and you allow them to switch regulators, and the other regulator says yes,
It's fine. Yeah.
right? Like that, you're just shopping for a yes. That's like your kid going, hey, Daddy, can I have some sprinkles? And you go, no. And he goes, all right, cool. Mommy, can I have some sprinkles? And she goes, yeah.
Yeah, that's exactly what happened.
And then the kid throws up, and then you got to take him to the hospital. You know what you want to say?
Yeah.
Fuck you, son.
So I told you it's going to happen.
This is your own fault.
You should know better. Listen to mommy. Listen to me.
But you can't do that because
say
Daddy's the FDIC in this case.
Uh-oh.
You got to pay insurance. You got to take care of that kid.
Mm-hmm.
That policy's under you.
That's right.
So why didn't you step in and say something?
Why didn't they, Chris?
Well, there's an argument. They wanted the kid to throw up.
Oh, learn your lesson, boy.
I believe the Fed was and absolutely is well aware that bank consolidation was an eventuality.
Right.
They knew that these banks were going to earn less money. They knew that there was stress in the system, and that stress had to be visible. You already heard Jerome Powell come out and say in previous meetings before his little clusterfuck of an hour-long interview, which we'll get into shortly, that he'd rather overcorrect and undercorrect. This is part of the overcorrection.
Mm-hmm.
And what blows me away is the fact that people don't think it rolls down to them. It rolls down to you, man.
Yeah, exactly. This is the problem that people don't understand. We got to get them to understand that why do they need to care about this?
Well, okay. So let's just start with some basic concepts, all right?
Okay.
Less banks means you've got less competition. When has less competition been better for pricing?
Yeah, exactly.
You know what I mean?
Right. So then the argument though is this: there's I think approximately 4,900 banks out there.
4,500, but yeah,
around 4,500 banks out there. I think the closest country next to us is 500 banks.
Yeah, true.
Right. So it's like, all right, maybe there is some room to come down, but But we got to remember, these are regional banks.
Yeah. So let me just throw something out there, okay? We've all been at a large bank at one point in our life almost, right?
Yes.
You generally don't start at a community bank, stay there unless you're from a smaller town.
Mm-hmm.
Most of us start at a larger bank and go, my service fucking sucks. I'm going to go to a smaller bank because I want better service.
Okay.
There's nothing special about banking. None of us do anything special anymore.
Mm-hmm.
I don't give a shit what they tell you. There's nothing proprietary. We all do the same shit, just different ways. It comes down to service, right?
All
it's
service.
just service. Whose service is better?
Right.
You're going to get better service at a community bank.
Right.
That's it. And on top of that, large, big box banks have no problem saying, you don't fit in my little checklist of things to do.
Right.
I get enough business applicants where I can take all the ones that I want that fit my little box.
Right.
You can fuck off.
Yeah, and I don't have to pay you the same amount of interest on that savings account because, we're bigger, we're better. You don't have to worry about us. So
your money's not at risk over here, kids.
Yeah, so you won't get paid out the same, right?
And how does this play out?
Mm-hmm.
Let me explain to you how this plays out. Okay? JP Morgan posts the record profits they posted last year.
$49 billion.
$49 billion.
God damn.
They said, you know what, JP? Shit. It's JP. Sorry, wrong asshole.
JD.
Mr. Diamond.
Right.
Is it Diamond? Mr. Diamond, we're going to give you an extra $36 million. You know what?
Right.
We feel like you deserve it. And he's going to go, oh, thank you. And he's going to take his money. They wound up being the most profitable ever. So think about the context of this politically.
Mm-hmm.
If your largest banks in the country, your largest bank in the country, are making more money than ever because they can pay less and take in more money and take on less risk because they've got way more clients because other things are failing, there's no pressure by them to lobby against this politically.
Right.
So what happens? You have the Fed clearly consolidating, which helps their largest clients.
Mm-hmm.
It's mind-boggling to me that the Fed saw this coming and allowed it to happen. And this was a continuation of a previous problem. This should never have been allowed to happen.
Yeah, man.
And now what's going to happen when they open the market tomorrow? You're going to see this become all over the news, and it's going to be a big problem, and it's not going to stop here.
Yeah, and here's the other big problem that ties into all this and why we constantly talk about all the topics that we talk about. Okay, the Fed right now, they're holding steady. At their last meeting, January 30th and 31st, they said, we're not going to cut rates. And guess what? We're probably not going to be cutting rates in March. So let me get that out the way right now, right? That next meeting is less than like a month and a half away.
Yeah, it's not happening.
Okay? It's not going to happen. Before the January meeting, I think it was more than a 50% chance that the Fed was going to cut rates in March, right? Remember, we said on this podcast, that's the one where everyone has circled like this is when the rate cuts are going to begin, okay? After the meeting, it was down to 40%. As of today, it's now down to a 10% chance that they cut rates, right? Meaning it's not going to happen.
Yep.
Okay? So with that not happening, right, what does the Fed look at for when they need to cut rates? They got the jobs report that came out in January, which is bullshit.
We called bullshit before it came out, though. I was listening to the last show, and I was so proud of us for talking shit on the jobs numbers before it came out, because when they came out, my knee-jerk reaction was, this is bullshit. And I was like, oh, we said that already. Never mind.
Absolute bullshit. So Raphael Bostic, right? Bostic, out of Atlanta, Fed president out of Atlanta. He's got a vote. Okay. He recently came out and he said, what are the Fed's two mandates? We talked about on the show before, price stability, right? And maximum employment. Price stability, very easy thing to gauge. You look at inflation. Are we hitting 2% or are we not? Okay. We're still working our way down to 2%. We got a 2 handle. They want to see more evidence for that. Fine. Maximum employment, though, is a thing that is kind of wonky. What does that really mean, maximum employment? There's no set target rate. What has it always been? A healthy target rate is somewhere around 5%. Bostic came out this past week, and he said, since I've started, that figure on the unemployment rate should be somewhere around close to 4.5%. As of the last 7 years or so, I think that we're now comfortable in adjusting that down to 4.1%. Okay? So here, and this is why it's important. I know we're getting a little technical here with these numbers, okay? But if the unemployment rate is at 3.7%, okay, and inflation is doing fine, and everything is going fine with GDP, they're telling you these are the metrics we're looking at to cut rates. I don't give a damn about what's going on in the banking sector. I don't care if you guys lose money in the stock market. They've already come out and said stocks are overvalued. We're going to hold tight because these are the things we're looking at.
Mm-hmm.
And that's the fucking problem here, right? Because they're saying we have employment's good, man, right? The JOLTS report is great. You got all of these other, man, it's just really, really frustrating.
Not only is it really frustrating, but here's a part that bothers me. And I hope that Logan and I from Housing Wire get the opportunity to debate this. He's been very supportive of some of the numbers they're looking at, although we agree on a lot of things. This is one of the things where I don't agree with on the job numbers. There was a period of time where middle class meant you can go to work your job, guaranteed to buy a small home. That small home would build up equity. You'd get a bigger home as you started a family. Your job would have some upward progression in salary. And these things were just foregone conclusions that if you did all the right things and you were in the right position, that these things would come to you and life would be comfortable.
Right. The system will take care of you.
The system worked.
Right.
And then it didn't work. No. And then spouses had to get jobs. And then two people had to work. You know what? Oh my God, at the time, that was such a huge paradigm shifting thing.
Right.
My wife's got to work because we need more money to pay the bills, and it's so difficult. And then it became more women in the workplace, then more women graduating college. And I'm all for women, and I support the shit out of that. But why the fuck aren't we moving on to the next paradigm shift and accepting it to be reality that one person having one job anymore is not fucking enough?
It's not enough, man. Yeah.
So many of these people have two jobs. It would not surprise me that way more people have two jobs than those numbers account for.
Right.
Like a husband with two jobs and a wife with one. Now you got 3 jobs for every 2 people. And of course the numbers are fucked.
And look, I'm not saying that I'm all for everyone getting a job, everyone having a career, okay? But for a traditional family, it's hard these days. We can't even discuss the idea of having a third kid because of the fact we both need to work, right?
Yeah.
And because a traditional family used to have someone at home. I'm not saying there's gender roles. I'm not saying that the wife needs to stay home. If the wife wants to work and the husband stays home, fine, so be it, right? But you're telling me it's not above like the system. Let's put a tinfoil hat on for a second.
I keep mine on now.
Okay.
I don't have to take it off.
It's not above the system to spin the propaganda to think like women, you should be developing your own career too. Well, who does that help ultimately? It ultimately helps the system to continue working the way that it was because things started to get so out of reach, right? So now you got dual income households and everything still stays fine. Status quo, you can still work towards your dreams and everyone can own a home and so on and so forth.
Anymore.
But now you can't anymore.
No.
Yeah, man.
And wage inflation hasn't kept up. It's a fucked up problem. And I don't know why we're ignoring that there's been another paradigm shift where clearly during the pandemic, you saw people get 2 jobs. Mm-hmm. You saw people get stimulus. And we're in the middle of this hustle culture that's fucking prevalent everywhere.
Right.
We're a sexualized, distracted society now. Why don't we think that people will have multiple jobs? And why don't we reframe how we look at the jobs numbers? Instead, we're relying on this. And the Feds are leaning to your point, way too heavy into this shit going, you know what, guys, not yet.
Right.
Not yet. And Haroon, if you can go to the next article while I'm on my little tirade here, because it dovetails in. I'm going to fucking segue myself, goddammit.
Right.
Powell. This is a flagrant abuse of power in my mind, where this guy insists the Fed will move carefully on rate cuts with probably fewer than the market expects. This is according to CNBC.
Right.
Okay. Federal Reserve Chair Jerome Powell vowed in a 60 minutes interview, not the show 60 minutes, not an hour long, that aired on this past Sunday, that the central bank will proceed carefully with interest rate cuts. But it was more than that. This was a fucking PR campaign.
Right.
This was an absolute flagrant abuse of his power. He's always said, oh, you know what? Hey, I want to be the most vocal and communicative secretary that the FOMC ever had.
Yeah, look,
I want to communicate to you.
I put myself out there, right? I'm talking to the people more.
I'm telling you, no, bitch, you enjoy the spotlight, okay? That's what you're doing right now.
He's looking for a book deal.
Yeah, you trying to write that check.
Right.
We see it. I know. This is so wild to me.
Right.
And then here's the problem. It wasn't just this. Okay, so for those of you listening, and you go, Chris, why are you so pissed off? Okay, the Fed has a notorious history of telling you they're going to do things and then something happened and then doing it differently.
Right.
Especially when it comes to their prediction of when rate cuts happen.
Right.
They have got a bad track record of actually following through with what they say they're going to do when it comes to rate cuts. And that's just not my opinion. That's not speculation. That's just facts.
Right.
Bars.
No cap.
All the facts.
And all the bars.
Yeah. And anyway, so what happens? He does this shit, which when I saw this, I was like, I'm not fucking watching. I'm not going to fuck him. I refused.
Yeah.
But then he has every single one of the Fed presidents. There was like 5 of them lined up for interviews the week afterward, all reiterating the shit that he was saying.
The same shit,
you were literally trying to convince the market. This is what he's basically trying to do. All right, guys, here we go. Kashgari, go get us some tea. We're going to talk amongst the adults, okay? Here's what I want you to do, okay? We're all going to go out and we're going to tell these fuckers who were betting. Because prior to this, the rate cut prediction in March was heavy.
It was heavy. So just to recap for everybody, they had predicted 175 basis point cuts by the end of this year. Okay, what does that mean? That looks like what? 7 rate cuts if you're thinking 25 basis points at a time. Okay, mind you, there's only 8 meetings a year.
Yeah.
Okay, he's like, no, that's not happening, right? Mm-hmm. And even the Fed's predictions themselves think that there's only going to be 3 rate cuts this year.
Yeah.
Right. So him saying right here, Powell warned that monetary policy tightening would cause quote unquote some pain. However, it really hasn't happened yet. That's such an abuse that he knows well enough to know that there are lag effects at play here. Odun, can you I know, Chris, I want you to finish your point too, but go on to the next article. Credit card delinquencies surged in 2023. What do you mean? It really hasn't happened yet.
You mean to finish my point, but you want the next article?
I'm just saying.
God damn, that was stone cold, bro.
I couldn't stop it. I couldn't bake that. I couldn't bake that for later. I know we weren't going to get into this.
I'm just saying, like.
But what do you mean? What do you mean? What do you mean it hasn't happened yet? Okay, the delinquencies are up. People are paying record high minimum payment levels. The effects are going to come later when people can no longer ever afford to be able to buy a home, dude.
Credit card debt, which already had its historical high of $1.08 trillion,
yes,
is now up to $1.13 trillion. Now I know it sounds like, oh, Chris, it went up 0.05. These are billions of dollars, okay?
Of people who don't know how to manage their debts.
It's up way high, and everyone's like, you know what? It's okay. I am literally seeing bankruptcy filings increase at a cadence that's been unimaginable to me in recent years.
Yeah.
Like, I'm getting filings coming in every single day, so I see all these things. But they're all coming in at a rapid cadence, and none of them are material in my mind, but just the fact that they're picking up is a scary thing to me, because you know what? You never know when this will flip. And if you're the Fed and you're trying to convince the market, as Jerome Powell, hey, back off, guys, stop being so optimistic. And then you have your FOMC panel go out, except for Kashgari, who's drawing with crayons in the back. But everybody else go out, right? And you have them convince the market and reiterate your stance. You are now trying to manipulate the market's behavior and expectations.
Right.
You could say, I'm just trying to level set expectations. The market's not listening to me, so I'm just trying to correct it. Okay. You cannot manipulate the fucking market, okay? Right. You send a message of what your intent is. Whether they believe you or not, it's not on you to convince them to believe you.
Right.
And this, to my mind, is frankly behavioral economics rolling out. This is from October, though, dude.
Yeah, this is September. Yeah, it's up even higher than this now. But Haroon pulled up something from UScourts.gov. Bankruptcy filings rise 13%. This was published in October of 2023.
Yeah.
Wow. Yeah, I mean, I know this is definitely up. I don't know, man. The JP from the hood he's tap dancing a little bit.
Well, I don't like the tack that he's taken here, and I certainly don't like that this just plays so badly. And so I can already tell when we get in the office tomorrow that this is going to be all over the news. It's going to be something that people are watching. There's going to be a lot of focus on the bank sector, particularly the KBW regional index. And there's just going to be a fear of a contagion run.
This kind of stuff that happened with the New York Bancorp doesn't just happen overnight, by the way. I'm telling you right now, Jerome Powell was privy to this.
Oh, he knew.
Okay, so for him to come out on fucking 60 Minutes and say that, we really haven't seen the pain yet.
60 Minutes. They took out sound and resilient and strong banking. They took that out of the last FOMC conference. You want to know why?
Yeah.
Someone's like, hey, Jerome, you know that bank's fucking up on the East Coast? Yeah, we should probably not put that, because then we look bad. So we just, we cut that shit out. They're gonna be like, oh, that's why they did that. We
saw. Yeah, we knew it wasn't.
Yeah. Call us Nostradamus.
Yeah,
we saw the future.
Yeah, and that's something you routinely see analysts do. Like they'll take the Fed's entire speech, right, and then they'll compare it to the previous.
There's a red line from the previous one. Yeah.
Yeah. They'll literally compare it verbatim, and all they do is sometimes change out the words. This time they took out the entire section on banks, right?
That being strong and resilient.
Yeah, being strong and resilient.
Yeah,
Unreal.
It was wild.
Not even saying, we're starting to see some softening or some weakening. No. Just removed it.
And here's the truth, okay? It's the cold-hearted, real truth. All banks have assets that are underwater. Their treasuries, their loans, all banks.
Yeah.
The only difference is, do you have to sell those assets to increase your capital, right?
Right.
Can you sell those assets to increase capital? A lot of them underwater. You have to take a capital hit to do that. Do you need to sell those assets to pay deposits? I mean, there's all sorts of reasons why you would need to do it. If you don't have to do those things, great.
Right.
But are those assets, those loans that you made, going to pay as agreed?
Right.
In the case of New York Community Bank, not so much.
The problem, see there's a problem there too. If they do have to sell assets, right, to raise some capital, that doesn't necessarily mean that there should be a run on deposits either, though.
Well, first of all,
they're two separate things.
So let me be clear here. All right, if I make a loan, and we talked about this many times on the show, for $10 million,
right,
at 5%, but rates go up to 7%, that $10 million loan is worth less than $10 million on the market to sell it, because I can go get a loan for $10 million paying 7% now,
right,
if I was buying an asset.
But
so
not a problem if you're not trying to sell it.
Not a problem if you're not trying to sell it, but if you're trying to sell it,
yes,
now I'm going to sell it for less than $10 million. So I have to have the capital to make up that loss.
Yes.
That I can spare. If I don't have that capital to spare as a financial institution,
right,
then selling that's just going to hurt me more.
Right. Ultimately, the reason why banks have been sitting on the sidelines waiting for Jerome Powell to come out and say, we're probably done raising rates, which that is the one thing that he did touch on at the last FOMC meeting, the post-game press conference. He did say, I think we're likely done, right? He didn't even come out definitively and say that we are done, but he did say that.
Yes, he did, and he did.
But we all knew that.
Everybody knew that.
Everyone's talking about cuts anyways.
Yeah.
Right?
You kind of, everybody knew that. Everybody was banking on, hey, where the cut's going to happen. What's the probabilities there? Right now, I think we're in a bit of a tailspin. I am very, very worried. I do have hope that the emotional status of people has been burnt. When the contagion period happened, everybody was freaking out about banks.
Yes.
And I think most people realized that worrying was for nothing. Frankly, everybody should have realized. Nobody lost any money at Silicon Valley Bank. They all had access to their money. Nobody lost any money at First Republic Bank. Chase stepped in. Everybody was okay. Signature Bank, they had access to their money. Right. The FDIC did their job. They did what they're supposed to do. You had access to your money. Your fears unwarranted because nobody lost money.
Yes.
At least that I'm aware of. There could have been some nuance there that I'm not aware of. But from what I understand, nobody lost money.
Everyone was made whole.
Yeah. So I'm hoping that between it being so close in proximity to the March contagion period, people are going, you know what? This is some scary shit. Let's trade the stocks down a little bit because we're going to try to make some money in the shorts. But let's not pull deposits out because we're worried about the world.
Yes. And
I'm hoping that's what happens and that this goes quietly into the night. But my other fear is there's other banks out there that have these problems.
100%. And that is the fear, right? Is that New York Bancorp isn't the only bank that had some office buildings that are way below value right now.
No, right? not at all. And if we're going to start pushing institutions to get away from the appraisal, the standard, and go like, hey, call your broker friend, get a value. Oh, he says lower. We go, that's bad. We go cut this down.
Right.
Like that's so wild to me. I don't understand why they were forced to do any of the things they were doing. There's clearly a backstory there. There's clearly some issues going on that I'm sure the OCC or somebody will ultimately enlighten society on that necessitated this, whether it was a management decision that was bad or not, who knows. But for right now, I am very, very confused about how and why this happened. And certainly, why'd you let him buy those assets, dude? Like, who did the analysis and said, you know what? This bank is well positioned to buy this institution. Did nobody look at the assets?
You had to have known they're going to have to set aside an absorbent amount of money as a loss provision.
Well, and the other thing too is, and I would say I don't know. I haven't looked at their balance sheet, their income statement. I haven't looked at all the details. You never want to surprise the market with something like this. That's bad.
Yeah.
Like, so there is some management fault here. That's 100%.
The
right?
$200 million surprise loss in the fourth quarter.
Yeah, whatever that was. Yeah. There's some management fault here, for sure. Can they survive this financially? Probably. But will their stock price drop? Will people have a run on deposits that will ultimately kill them? I don't know. And that's wild to me that this bank run may have been caused by the regulators.
By allowing them to purchase and get a little too greedy.
Well, and look, okay, if they were forced to do this, tell people why, clearly why, and then come out as a regulator or as somebody who can speak on this from an educated standpoint and say, we forced them to do it, but they're going to be okay because of X, Y, and Z.
Right.
Instead, you let the market kind of read into it and fucking trade them down 38% in a single fucking day, 60% over the course of the last week. Like, at what point does someone say, hey, guys, like, you're all worried about shit?
Right.
This bank is not on, it's a $100 billion bank.
Yeah.
They got the money. They're going to be okay. I don't know it to be true, but say something, man.
Yeah.
You know, I mean, if the bank says it, it doesn't provide any comfort.
Question for you guys. Saied, you're an underwriter. Chris used to be an underwriter. When you, why do you have to wave your hands like that?
I mean, it used to be an underwriter's question.
Saied, you're young. Chris, you're old.
You moved up the chain.
You know that's what he meant, right? You heard him say it?
You're 6 foot closer to the ground, brother.
Anyways, Saied, you have to go out and look at properties from time to time, right? To make sure that the loan's still good. And right?
we've been taking on that role as it relates to making sure that the property's still being well maintained and making sure during this time. Yeah.
So with these large banks, like, do they go out? Like, does someone go out there and take a look at them? I know you're talking about regulators.
They have a third party service that they usually.
How often do they do this?
Ooh, yeah, about that, Saied. So typically speaking, from an asset quality review perspective, so keep in mind a bank has made a loan. One of the things that got very loose prior to the Great Recession is that banks were like, okay, we originated this loan. It's really strong. It's paying as agreed. They wouldn't re-underwrite on an annual basis, even though they had the ability to do so in the contract.
But what about the asset quality review?
The asset quality review, that part of it, they wouldn't do on an annual basis.
Oh, okay.
They would be behind on it. Nobody really tracked it because if you made a loan at 50% LTV and they paid, like, what do you care? They're paying, right?
Okay, so what Chris is talking about right there is that as of right now, banks have a division where after you make a loan to someone that owns, let's say, an apartment building, every year they have to send you their financials so you can relook at the numbers to make sure that it's still covering their debts.
So, for example, in this situation, the New York Community Bancorp having those two office buildings you were talking about, right? Who's checking that out?
Well, they got an appraisal.
So number one, let's be clear about a couple things. So there are higher requirements to do so in a more documented format if you're securitizing these assets on the Wall Street. Because people have invested in these at like a security or stock, they're reviewed under a little bit more scrutiny. So, for example, we do the stuff that we do in large part because, number one, we want to know our clients and there's a relationship thing there. There's also a whole another level of scrutiny that goes out to a third-party vendor who does it from a third-party neutral perspective because the street wants to make sure those assets are performing because they're getting dividend payments, getting interest, and all those things, right? But for the purpose of this conversation, when a loan goes bad and they know that it's going bad, it triggers extra scrutiny by the bank. So getting updated financials, rent rolls, and operating statements. In this case, they were troubled to the point they were required to get an appraisal under regulatory definitions. Right. So there's a trigger when you're worried about this property, performance of it, you go get an appraisal. So they did that.
Right.
The appraisal came back and said, hey, the value's there. And as part of an appraisal process, they're going to get the operating statements, the rent roll, and make those decisions.
Right.
That's why this whole broker's opinion of value thing is so wild to me.
It is wild to me, but if for the I think you mentioned that for the appraisal to come back in and it not come down in value too much, that's a little concerning.
Yeah,
because that's not there's I mean, what we're seeing, there's no way that it can't be coming down more, right? With the vacancies, who's going to fill those vacancies, bro?
I don't know. OnlyFans?
Wiki feet?
My wife told me that we do red light therapy at night. My wife was literally like, you got great feet. And at this point, I'm convinced I have got like an undisclosed talent. Like, I think, Haroon, just hypothetically speaking, if I were to pay you to suck on my toes,
hypothetically speaking,
we would make a lot of money off of it. Like, what would be your threshold for dollars to make that happen?
Free, baby.
Free. He's always got the perfect response.
All you had to say was toe jam.
Oh, man.
I'll pay you.
Oh, Jesus. Oh, Jeff, I'm sorry.
Yeah. But yeah, no, man, we know that the vacancies are there, and we cited even in our own local markets, properties are down somewhere around 60% for some of these office buildings.
Yeah,
so
no.
how is it not going to come down at all in wherever? I don't know where those office buildings were. I'm assuming New York.
There's clearly a backstory there we are not privy to. 100%.
Yeah.
There's a lot that probably happened, but
And that's what probably triggered the regulators, that they were like, there's no way. There's no way that these values haven't come down.
well, were they part of the legacy portfolio? Were they acquired from Silicon Valley Bank? Like,
Right.
Who was making the decisions? So if they acquired from Silicon Valley Bank, did they rely on a president Silicon Valley Bank had? I mean, there's a whole history that I want to know. And it's like, why wasn't that history fully disclosed to the market in detail?
Yeah.
Like, walk me through it so you guys don't suffer like this. I'm sure someone's like, shit, Kevin, we're down 60% today. How was your day?
Yeah.
I mean, they're freaking out. Their employees are freaking out.
For the listeners out there that are thinking about, okay, big office building, so the bank's losing money on this, that's a big deal. We've actually had several comments that really rubbed me off the wrong way when they said this.
Someone rubbed you off.
The wrong way. Yeah, they didn't do it the right way. They did it the wrong way. Right. So fucking guy.
It was your words.
So
I didn't get rubbed off.
Big
Haroon,
bank.
did you get rubbed off?
Not the wrong way.
He got done the right way.
Oh, wow.
Hey.
Listen to your comments.
El Jefe. So, jeez, this is what rubbed me off the wrong way about that. I can't even fucking finish my sentence. God damn it.
By the way, it's rubbed me the wrong way, you fucking dick.
No, rubbed me off the wrong way.
No, that's not a thing.
It's a thing.
No, it's not a thing. You're trying to be ethnic.
This is what rubbed me the
I
wrong
like
way.
tacos.
Yeah.
Rub me off.
Is that you can't just look at it as like, oh, big bank lost money on an asset, right? That's not what it is, dude. Like Chris said, if these are, securitized and put on Wall Street, there are pension funds tied to these buildings. They have a teacher pension fund tied to some of these buildings that are now suffering losses. What's going to happen to those pension funds?
Well, that wouldn't be the case because they wouldn't be held in their portfolio. But
for this one,
but
to not worry
there
about
are securitized assets.
But my point is, these office buildings that are going down, right? It's like, no, you have to care about what's going on in the space because it doesn't just affect, the investor or the owner of the building. Right?
So a great example. We told those of you who listen to the show, the legacy listeners, the OGs, the homies. We told you guys way back in late 2022 and early 2023 there would be a rolling recessionary economy, that the finance and lending sector was going to be the kind of the kickoff point, that it was going to roll into other sectors, and that as much as we thought it would be like this big in-your-face thing, it was going to slowly wind its way through different industries. And we're seeing that now. Fucking UPS and Xerox and Spotify and everybody's laying off now. Like
Snap.
It's Snap, 10%, baby.
Damn.
Man.
You're still a Snap guy, huh?
No, I don't have a Snapchat account. Yeah, it was just another thing. I've already got like 12. I don't even know the social media.
I remember being heavy into it when it first came out. I really enjoyed it.
Snapchat?
Yeah.
Yeah, you strike me as a disappearing 24 hours guy.
Why?
If you're reading into that and it's rubbing you off the wrong way.
Why? Why are you doing this to me?
How you did it to you?
We're not getting into this. We're already at an hour.
What are you talking about? Dude, we got
No.
The listeners want more.
No, we're at an hour, man. This is what we said. The consumption numbers are there, dude.
All right, well, I've been saving a story to the end.
Okay.
I couldn't hit you guys with this at the beginning of the night because if I did at the beginning of the night, I'd be hearing it all night long, like rubbing you off.
Okay, real quick for the listeners that enjoy story time on this podcast, for our podcast listeners, whether that's on Apple or Spotify, please head over and leave us an honest 5-star review. It's been kind of dry. I've been waiting for a good one.
So Saied's been
How
rubbed
dry
off the
has it
wrong
been?
way. It's dry, and he's waiting for a good one. These are your words.
My words. You can't just let it go. It's supposed to be just between you and I.
I was not rubbing him off.
You're supposed to be rubbing me off the wrong way, the right way. So leave us an honest 5-star review. And for our YouTube viewers, please make sure you subscribe, hit that like button, ring that notification bell, do all the moist, goody good sassafras. Yeah.
You got the moisten it this time.
Yeah, I did it. Yeah.
Okay.
Get into story time.
So Hugo and I walk across the street.
Damn, you named him too.
Yeah. I mean, he didn't rub anybody off. So we walk across the street to get Nitro Cold Brew. It's like 3 o'clock. It's finally stopped raining.
Mm.
So we walk across the street, and we're in there getting coffee, and he gets his coffee, and I'm sitting down. Some guy walks up to me. He goes, Chris, right? And I go, yeah. And he goes, oh, you don't know me. And I go, oh, okay. He's like, I listen to the show. I'm a fan.
Wow.
Matt. And he's like, huh? What's up, dude? He's like, no, I'm just a big fan. You're a lot bigger than I thought you would be.
I make you look small.
Yes.
I make you look small.
Don't do that. Don't flex. Don't do that.
How small do I make you look, Chris?
I didn't know how to take it.
It's a little insulting, or what was it?
It was, he was like, huh?
Like bigger in what sense?
He did not define.
You should have made him clarify.
He said, you really running things over there? Like, I'm like, what? And he's like, I'm afraid of you?
Oh, shit.
It was very awkward.
Yeah. What's up, Matthew? Thank
Yeah.
you for listening.
Yeah. He works in multifamily
Oh, okay.
across the street from us.
Nice.
And apparently judges people in their aesthetic.
Good job, Matthew.
Yeah. So I came in with hurt feelings. And then one of the first things you guys said to me was I looked like I had boobies.
That's not one of the first things.
No, it was the second thing maybe.
Yeah, second thing.
And then you guys said that my hair looked...
We didn't say...
Oh, no, you asked me if I was going to have a second hair transplant.
Yeah, because everyone that I know that's gotten a hair transplant has gotten two.
No, it's fine. I don't have any feelings that are hurt. And then to cap it all off, you said, I think, this is Haroon, I think both Saied and I have bigger biceps than you, Chris.
Why? He did come out and say that. He just knows that you've been putting in a lot of effort.
So when people hear the show and they're like, oh, Chris is such a bully. No. I am the victim.
Mm.
I am the victim. You two drive here together. You plot and scheme.
That's what you're going with, huh?
You make me sound like I'm reading challenged by moving things around and pivoting.
Chris, you can read?
Not well, but
Okay.
I can read. Okay. And then you guys take shots at me that hurt my feelings.
Well deserved, though.
Why?
Come on, man. You know why.
I don't know why.
The thing.
What thing?
That thing for the guy that you did.
I did not rub him off the wrong way.
Yes, you did. Yes, you did. Oh, dude, you got anything?
Nope.
Nope, that was a little Grovery.
He's not been very communicative. I got to be honest. You have not been chiming in at the cadence you had been before.
No, that was a good question. He brought up a good question.
No, it was a good question. But I'm just saying, like normally before when we were 2-show cadence, he would chime in, baby.
I feel like today we came with a lot of energy, and he was just letting us go a little bit. He didn't want to.
You're asking a lot of good questions too, Saied, like getting the breakdowns. What does that mean? What does that mean? So,
Thank you, brother.
Fuck you and your passive aggressive insulting me.
Chris needs the help sometimes.
Can I get a compliment, please?
Oh, I saw this. We need to do this. I saw a video. It was of the Warriors. It was from back in the day, Odin. I don't know if you've seen this, but it was Steph Curry and Andre Iguodala sitting there, and it was a compliment competition where you got to make the other person laugh by giving them a compliment. We should do that for one another. I give you a compliment. You give me a compliment. Let's see if we can keep a straight face.
Go for it.
No, I'm not starting this.
Why not?
No, I got to prepare for this mentally. I'm going to lose this right now.
You have great teeth.
I do have great teeth. Thank you for noticing. You have a burning desire to please people.
That is wildly inaccurate.
No?
Yeah.
You don't like to please, huh?
I literally say that I'm borderline autistic or Asperger's or something because I don't really care about pleasing people.
You don't like to please anybody.
No, I like to please some people.
Okay.
Yeah. You have a fantastic set of eyebrows. Yes.
It's funny because it's not
1-0.
It's funny because it's not true.
Game over. Good night, everybody.
Good night, everybody. Bye. Reverse.